Back on your money on market sense, the interest rate hike cycle is driving some homeowners to sell and downscale their property. This is as they battle to service their home loan repayments. That's the message echoed by some banks who are also concerned that many first-time home buyers may not be able to afford to buy their own houses. The high interest rate environment is pushing up home loan installments of already overburdened consumers.
The interest rate hike cycle started last year in November, pushing the prime rate to 8.25% this month. Customers with a home loan of 500,000 rand will likely pay an extra 390 rand due to last week's 50 basis point increase in interest rates. And a customer with a 1 million rand home loan is likely to fork out an extra 770 rand on a monthly basis. Experts say this could affect some customers' appetite to purchase houses.
If you look at the customer in the lower end of the market, in South Africa, we typically call them the affordable housing market. Generally, the demand there is not going to go down significantly. It will just be a factor of affordability there. So we might see less and less customers qualifying for a mortgage for a property that they're looking for. The more affluent customers are more discerning customers, so they might actually take their time in terms of getting into a property transaction right now. So we will see a little bit of a tapering in terms of those customers.
Your credit score is likely to determine the interest rate you will secure for your home loan. And if you have a good credit record, the chances of securing a better interest rate are higher. A home loan comparison service will give you an opportunity to shop around for a better interest rate. Some banks say a number of customers are likely to downscale as the interest rate hike cycle continues to bite.
When we had the lowest interest rates, we actually saw a significant entrance of first-time buyers into the market because the conditions at that time were quite perfect for first-time buyers, which is particularly those that were renting. But now as we shift to rising interest rates, we are seeing that picture change towards those buyers that are existing in the market. At times we'll call them repeat buyers or your existing homeowners that may choose to either sell their property, downscale for whatever reasons, or upscale. So ultimately, it's really about the shift in the type of consumer that we are likely to see with the change in interest rates.
Not all homeowners can secure a 100% home loan. Experts say paying a deposit will help reduce your overall home loan debt and could improve your chances of securing a favorable interest rate. Customers in an affordable market, as well as those with a good credit record, are likely to be given a 100% home loan.
If you pay down a deposit, that is looked at very favorably by the bank because the bank is effectively taking lower risk and you as a customer have got skin in the game. So if we look at a customer looking for 100%, and a customer willing to put down a deposit, those two customers will generally pay a different interest rate. The one paying down a deposit would get a better interest rate compared to a customer looking for a 100% bond.
FNB has over the years been accused of racially profiling its customers, but the bank, which has been vindicated by the courts, maintains that the allegations are irresponsible and unacceptable.
We've gone to court a couple of times and we've been vindicated by the court confirming that our rates are not racially biased. There's no racial biases in terms of how we determine our interest rates. Interest rates are determined by the customer risk. So a good risk customer, whether that customer is blue or green or yellow, they would get a favorable interest rate.
Consumers are urged to consider the costs associated with buying a house. If you are buying property of up to 1 million rand, you are exempted from paying transfer duties towards your home loan. Improving your credit profile will also increase your chances of securing a better interest rate.
Manage your credit profile. That's within your control. That's number one. You get a free credit report every year. Access that and understand it. Secondly, we say don't overexpose yourself to to credit if you cannot afford.
Securing a home loan is one of the most valuable investments one can make, as a house usually appreciates in value. But avoid the temptation to overexpose yourself to credit and rather opt for a house you can afford, even if the interest rate goes up. You could be forced to downscale or even sell your property if you are unable to service your monthly home loan repayments. Naledi Matlapeng, SABC News, Johannesburg.
Right, more news coming up with my colleague.